Good morning, one riddle at a time. This is Anna Kelly, REI mom, and I'm here with Casey Franchini, and we are here filling in for Michael Zuber while he's having an amazing vacation in Prague, I believe. And today we are going to give a quick financial update from what has happened since Thanksgiving and since we talked a couple of weeks ago. And so this economy is very crazy. And with all due respect to people that struggle with mental illness, I'm going to use the term kind of bipolar. It's all over the place. And so it's interesting. We've had quite a bit of negative economic news since about 2 weeks ago, leading up to last week when we talked, Casey, or the week before Thanksgiving, talking about how a lot of the economy is really starting to deflate and become more and more likely to enter a recession. And then we had some surprising data come out this week, literally as early as this morning. And it shows that some of the economy is surprising again into the upside. And so what are we to make of all of this and what does it mean for the economy? And so just a couple of key indicators that I thought we would talk about today. I saw this as of this morning, and I'm just going to pull this up so I give you the right quotes. But Black Friday shoppers spent a record $9.8 billion in the US online, up 7.5% from last year. So, we kind of went into Black Friday with a lot of talking heads saying the consumer is weak and the consumer is stressed. And we've eaten through all of our COVID savings, COVID money that was given to many of us, and people were saving it. And most US households have really spent down that money, and credit card balances have risen significantly, as well as credit card defaults starting to rise. And so a lot of economists and people on the news were basically saying, this is going to be a very bad Black Friday. The consumer just isn't going to go spend. But, the consumers that we are in the US economy and good old capitalism showed us that consumers are still willing to spend on Black Friday. So, part of the question becomes, does this really mean that the consumer is stronger, that we have a soft landing, that we're not going to have a recession, and that things are going to go back to normal now that inflation's coming down? Or is there more to the story? And so I dug just a little bit and I found another article that actually came out on Bloomberg this morning that said some of the top retailers who actually make the most money over Black Friday actually reported that they had a 4% drop in sales year over year compared to last year, which is interesting because these sales numbers talk about dollar amounts. And with inflation, we have higher dollar amounts per goods that we're buying. So you would expect that if the sales activity were equal, we would see an increase in numbers. And so these Black Friday sales kind of showed me a lot of what's happening in the rest of the economy. It's that there are certain sectors of the economy that remain really strong and resilient, while other sectors of the economy are really starting to show signs of weakness. And along the lines with this GDP sales being slower for some, we've also seen a record number of bankruptcies of shopping malls, of stores that typically have had brick and mortar and online, from Bed Bath and Beyond is a big one I can think of. Saturday Morning, CVS and Rite Aid, not CVS, and I think maybe Walgreens had recently been structured as well. So we've got online retailers that are going out of business. Wayfair, I just saw, is expected to declare bankruptcy here soon. They're struggling, and so you've got this bifurcated economy where some areas are really strong, some shopping retailers, consumer products are really strong, and others are struggling. And some consumers are really strong and some are really struggling. So what are your thoughts on that, Casey?
I wonder with these record Black Friday sales, and I honestly didn't even buy all my Christmas stuff. I really am getting over Christmas. Too many kids, all they want, and I hate buying. But with all these with record Black Friday sales, and all that's happening with the GDP, what is that? What is that going to mean for next year? And the first thing I think of is, well, if the economy is stronger than people thought, then they're not going to lower rates. They're going to raise interest rates, because that's what affects me. When I'm buying my rental properties, and I want to know, what I'm going to do next year. What is my plan for buying? And I do wonder that. And if the economy is doing better than the news is saying, which we always can't listen to the news, but listen to the numbers, but numbers can be fabricated. I took statistics in high school. Okay. And you can make anything fit whatever motive you want. So what is really going on now? The whole brick and mortar stores, going out of business. People are lazy. Everyone wants to stay at home. Nobody wants to go shopping. You can get better deals online. I wanted Lululemon pants for Christmas. I'm going to be honest. I have not ever owned a pair of Lululemons. And my mom came to visit and she's like, "What do you want for Christmas?" And I'm like, "Mom, I want you to buy me some Lululemons." There were better sales online than the store down the street. We still went down the street because I wanted to try them on. But I can see why the local retail stores and stuff are going more out of business and positioning more online, especially to compete with the Walmarts and the Amazons, and all those online stores that ship from China that can give you such the great deals, and it can get it to your door within a matter of hours, depending upon where you live. Why would you ever go get in your car and battle traffic to go shopping and wait in line? Hate that.
Yeah.
So, but besides all of that, what does that really mean for the economy? Are we still really struggling? I don't know. What do you think?
Yeah, it's really interesting. I think you bring up a really good point because just like the Bloomberg article showed, that certain retailers that get the most of their shopping usually over Black Friday are down 4%. The $9.5 billion number that's record was for online shopping, right? And so again, I think as the world shifts, I'm in the same boat. I have, four kiddos and they all want different things. It does get a little easier when they get older because what they want's expensive. And I give my kids, I'll
I
just
one
tell you, I
thing.
give my kids a $300 budget for Christmas. I'm like, we
Yeah.
have all that we need. I'm not going crazy. I pay for your school and your electronics or whatever, and you get $300. So pick what you want. And if it's one big thing, that's easy for me. If it's something smaller, I mean, so that makes it a little bit easier, and we can comparison shop. I don't have to get out to go to the stores to look for, you know, my son's not going to watch this, so I'll just say, a 3D printer. He wanted a 3D printer and all the stuff. So I was like, why in the world would I go out looking and driving all over the place to try to find these things when I can compare online and say, what's the cheapest, and do it from my own home and not get out in the Black Friday craziness. So I think just the way that the world is going, more and more people want to shop online. And I think also as we see increases in domestic terrorism, threats of terrorism, I've heard a lot of people say, I don't want to get out on big malls
Yeah.
during, holidays where they think that risk is increased. And so I think the way that people shop is definitely continuing to go more and more online. What that says though for, where the economy is going, I think it's really hard to tell. I continually caution about looking at news and kind of going, oh, here's this, so that means a big shift, or here's this, so that means a big shift. We really look at all these different data points, and economists who are paid, to do this really don't know either. I mean, they're, what they are usually critical of the Fed of doing is saying, oh, let's look at the latest data number, and that's how we're going to make our decision based on data that came out that's lagging, which really doesn't take into account the leading indicators of things that are showing us that things might be different in the next couple of quarters than it was in the last couple of quarters. So I think we have to be careful with looking backwards and then trying to pontificate necessarily that that's going to go forward. But when it comes to GDP, for example, we saw GDP kind of slowing, but I think it was 2.1 for the second quarter. And then for the third quarter, basically they updated GDP from 4.9% that was reported previous quarter to now saying that it actually rose at 5.2% annualized. And that is a very strong GDP number, extremely strong GDP number. So it shows that generally speaking, across the United States, we are still producing income as a country. The question then becomes, where is that happening? So on one hand, we talk about all these companies going bankrupt. We talk about corporate profits, which we looked at, last time that we spoke a couple weeks ago. And corporate profits are being revised downward, and more companies are warning about bankruptcies. And so we see, some areas really struggling. We see auto loans being repossessed at a record pace. And yet we see school loans, starting to be in default. We're starting to see defaults of the consumer on credit card debt. But then we have all this spending and increase in production elsewhere. So the question is, and I haven't had a chance to do this yet before the show because this just came out this morning, but where is the GDP growing? And one thing that I saw just in an article that I started to read, but hadn't really fact checked everything yet, is that part of that accounted for government spending. So governments spent more money, and that therefore produces, income in certain sectors. But that doesn't necessarily mean that all the rest of the economy is healthy. You look at shipping and how many shipping companies are slowing, and that shows that less products are being ordered and shipped, despite the fact that GDP alone is high. And so what I want to get out of this is we don't get excited and think, I saw on the news this morning, the soft landing is here, Powell is winning. This doesn't mean that a recession is averted, because last quarter was revised to show that we were, doing better than what we thought we were. This quarter, there's a lot more negative news that shows, CPI coming down, which is good, but it also shows profits going down in these bankruptcies. But then you have Black Friday sales. Well, part of the thing is, I think when we look at the consumer, so one side is, GDP overall. What are the sectors that are doing well? What are the sectors that are doing bad? When we look at, very similarly, the stock market, if you look at the stock market and you look at just what we call the Magnificent Seven, it used to be called the FANG companies, so the Microsofts and the Apples and the Googles, and NVIDIA, right? These key, huge companies, Amazon, make up about 60% of the returns of the stock market. And if you look at just the returns of those companies, they're very, very high. But if you look at the overall S&P and you look at it averaged out, it's actually down. The rest of the stock market's down about 4%. So you might say the stock market's up and it's booming and everybody was wrong about the economy. It's really going fine, and look at the stock market. But if you bifurcate that out, you see there's a few companies that are doing really well and the rest are not. And so I look more at that as a big picture than I do one quarter of really strong GDP, one day of really strong sales, because just like these companies are having to be very careful about what they spend and what their income is, consumers tend to spend the most money on Black Friday every year because they're shopping for Christmas. And Christmas is still very sacred in America, and a lot of people want to be able to go shop and buy products. So you get this kind of sporadic stuff shopping for birthdays, but most people are saving up, or they're willing to put on credit anything they need for Christmas. And so we are a debt society. And so even though I believe the consumer is struggling, but they were willing to make an exception, go into more debt, like we always do for Christmas, I think that it shows that they were willing to do that, and that it's a seasonal thing. But I do still think that when we look at the overall economy and all of these leading indicators, not just looking back at what happened last quarter or last Black Friday, but we look at all the other signs that are leading indicators like housing and orders and profits and employment, unemployment starting to tick up too. I think those are still showing us that there's pain ahead. But an official recession call, Casey, won't be called because GDP has been positive for 2 quarters. So despite the fact that we feel very recessionary, and I believe that certain sectors are clearly in a recession, that households are feeling the pain and becoming extremely weak, we do have these anomalies of these few areas. The GDP is high, and so we won't have the National Bureau of Economic Research declare a recession until we have 2 quarters of that GDP falling below trend. And so I think that this is just another sign of kind of those lag effects of inflation, the lag effects of spending out the excess savings, and those things are pushing out the time that it takes to get truly recessionary a little further out. So I don't see recession being officially called, for sure last quarter, possibly this quarter because of all of the, seasonal spending, but it might be, the second quarter instead of the first quarter of 2004 before we start to see all these leading indicators really finally, stop and create recession. So, good news definitely for the economy. We like to see CPI going down. We like to see GDP and sales going up, but I think we're not out of the woods yet.
Yeah, I think you hit the nail on the head. And honestly, I'm so glad we talked about this today, because I think a lot of people are going to read the news and they're going to assume that we are out of this. And you are so right. People will put things on credit. Christmas is important, and you're not going to let your family down. You're not going to let your kids' teachers down. You still got to get them that $10 or $20 present. Even if you can't afford it, you'll figure it out. That's what credit cards were for. We've always been resilient and come back, it'll be fine. And we might see that all this extra spending that people did on Black Friday and for Christmas, is really gonna kick them in the butt, in a negative way next year when they have to start making those payments, and now they're paying interest on those purchases, and it might be putting
Yes.
people in a deeper financial hole and really kind of make the situation worse by maybe some poor spending choices, recently,
Yes.
now recently. So very interesting. It sounded good in the beginning when we were talking, and now I'm like, this might actually be worse because of all
Yeah,
the
and
spending that people have.
it's interesting too, because if you go back and look at previous recessions, and I've spent a lot of time over the last 2 years really digging into historical data, because every future recession is different than the one before, but there's a lot of very similar things that you start to see over time that happen, but as the cycles change from expansionary growing to contractionary, and the timing of the peak to the trough, like when you're at the peak and everything's booming to the point that a recession is declared, it is like a very slow fade, and then a suddenly, and then it drops. And so it always surprises people. And so if you go back and you read news articles like before the last couple recessions, you hear the same story, because the Fed starts raising rates every time. They pause, and then after they start to cut because they see things are starting to get a little slow, it's usually a few months, and then all of a sudden it's boom. And everyone thought, oh, we had a soft landing. The soft landing, to me, based upon everything that I've looked at, is kind of this lag period between the time of the peak and the time of the trough. And it's like, it seems like it's going to be okay, and they're probably going to pull it off, and we're not going to hit a recession. We'll just have this little blip, and then it will go right back to where things were. That's what people always think we have. That's what
Yeah.
the talking heads always say, is because it's hopium. We hope that it's all going to be okay. So these things are better. So we're just going to say, yes, we're excited, we're optimistic. But unemployment being low is the thing that they always go to. Well, unemployment is always the lowest just before the recession hits. And then you start seeing softening in employment, which we talked about. We're starting to see softening in the unemployment numbers and all the data behind those numbers, the number of people that are working multiple jobs, the hourly wages, things of that nature, repeated unemployment claims, those that aren't able to find jobs. Those are starting to worsen already, but because unemployment's still low, people think, oh, we're out of the woods. It's not until after that sudden fall, when everything kind of, those lag effects of the interest rates and profits coming down and wages being squeezed and costs having to be cut, that we really then say, all the companies go, okay, this is bad. Layoffs start in mass, and then unemployment really ticks up. So it's always the lightest before the storm hits. And so I'm not trying to be pessimistic, but when I go back and
Yeah.
look at history rhymes, and these cycles always tend to surprise people. Like, the economy was so strong, how can we suddenly have everything so terrible? And it's because of the lag effects and the time it takes through the economy, which I would argue, because again, we had so much stimulus money given to small businesses, large businesses, American households, child tax credits. We had so trillions of dollars pumped into the economy. I think that has held us off longer and longer and longer than normal peak to trough. And everybody just thinks, well, if it's longer, it's not going to happen. And the reality is, I think all of the big picture signs show we are still heading toward recession. We just have these silver linings that we always do. And we need to be careful. And I think that's the so what of all of this is, right, not just to fill our heads with financial knowledge, but how do we react as investors, as employees, if we're working for other companies? And I think we need to be cautious during this time, because we're not yet at a bottom, but we've clearly come off the top. We're in a declining economy. We're going to have some blips. It's going to be a little bit bumpy, but I think we need to be very cognizant of, if the economy does hit a deep recession in this next year, which I think we will, how will that impact us? Are we already in debt? Should we be going and spending more money on credit card debt this Christmas? Or can we think about ways to spend a little bit less and still, enjoy the gift giving or whatnot? And how are we thinking about cutting our expenses in places we don't need it in order to be able to spend in areas that we do? Are we living below our means, or are we living, check to check? And I think that if you're already living check to check and you're already putting things on credit card, you need to really think about, pulling back a little bit on your spending to prepare for recession. And again, if it doesn't come, wonderful. If we, for the first time in history, truly avoid a soft landing after this level of economic change, then great. But history tells us the likelihood is it's going to be challenging. And so we need to be able to, be really cautious about our own debt, get our financial house in order, don't overspend what you can't afford, and then start saving some money so that if we do have a recession, and if you have rental property, because I've lived through recession and with rental property, and you have an HVAC go out, you haven't maxed out your credit cards on your spending, and now you have an HVAC go out, your tenants have been laid off, they're not paying rent, and you're struggling. Like, this is the time to get really cautious and conservative. Tune out the total doom and gloom, but tune out the total, the sky is rosy and everything is fine. Get yourself prepared. Prepare for the worst, because the likelihood is things are going to get worse, and then you'll be in a really good position when we do hit a recession to be able to make good financial decisions, and hopefully some really great real estate investing decisions as well.
Awesome. I think this was a really important video for us to do. So I know everyone's going to watch it. You always get great reviews. So thank you so much for bringing up this topic, and I hope everyone loves it. And Anna, where can everybody find you? That's what Michael always asks.
Great, Casey. You can find me here on the channel. You can find me social media, Anna Kelly, REI Mom. And for real estate coaching and investing advice, you can find me on AnnaKellyInvesting.com. How about you, Casey?
You can find me every day on Instagram. I live there. I have a hotel there in the Instagram platform. No, at Brick by Brick Wealth, and also YouTube, which will be starting up again soon. Brick by Brick Wealth, and anywhere you type in Brick by Brick Wealth, I'll be there. So thank you so much,
Awesome.
everyone.
Well, this has been so fun to do together, Casey. We'll have to do it again.
Absolutely.